Welcome to Coruzant Technologies, home of the Digital Executive Podcast. Welcome to the Digital Executive. Today's guest is Cole Snell. Cole Snell is a serial entrepreneur and author with a diverse background spanning multiple industries, from food to fintech. In 2018, he was introduced to a novel approach to personal finance using whole life insurance, a move which fueled his passion for the financial industry. He recognized the need for a more accessible understanding of whole life insurance and founded Life Tech Design to fill this void. Life Tech Design provided tools to demystify whole life insurance, offering invaluable resources for families and financial advisors. Cole also pioneered and authored a book on the child millionaire concept, underscoring the potential benefits of well-structured whole life policies for a child's future financial stability. Simultaneously, Cole noted a compelling parallel between whole life insurance and digital assets, particularly in their capacity to provide independence from traditional finance systems. Recognizing an opportunity, he assembled a team to create Infineo, a company digitizing whole life insurance using the blockchain and AI. Well, good afternoon, Cole. Welcome to the show.
Nice to be here, Brian.
Awesome. Great to have you on here. And I appreciate you making the time. Hailing out of the Bahamas right now. Normally, we stick to the continental U.S. mostly, but we have done 50 countries. I think Bahamas, you might be my second guest out of the Bahamas, by the way. But I appreciate you making the time, like I said. And Cole, I want to jump right into your first question. Your entrepreneurial journey spans diverse industries, including food and fintech. Could you share how your experiences in the food industry influenced your approach to financial services and led to the founding of Infineo?
Yeah, it's actually my favorite question to answer. They relate to each other remarkably well. And really, at the end of the day, it's a story of value. It's a story that a lot of entrepreneurs, unfortunately, get wrong. They don't spend a lot of time digging into their value proposition. I say to entrepreneurs all the time, describe to me your value proposition in a sentence or less and back it up. And you watch them kind of stumble because they forget to really dive into it and then own it. So the value proposition and the connection between food and finance is really, really very critical. Without both, you die. That's my value proposition. So people say to me, what's your value proposition? Well, without food, what happens? Well, you die. And without money, what happens? Well, you die. It's just true. I mean, it's just really a fact. And the big moment for me moving from food to finance was the fact that I realized that food was not, in fact, the lowest common denominator. I thought that food for the longest time, and I sold it with passion, with zeal, with gusto. I sold food like it was the last thing on earth because I felt that I was right. If you didn't eat, you died. So I had my sales team out there telling stories, adding value, bringing farmers to the table. I had a lot of success right around when the Food Network first came up about 12, 13 years ago, when the word artisanal, when organic became to hit, when farm to fork became a thing. I was able to apply actually some technology and then some blockchain technology to the end consumer's connection to, say, the farmer or the person growing the food. So this whole idea of artisanal, able to connect that, sold it with passion, sold it with zeal, made a bunch of money, put some high quality food on people's tables. And then my sales team came back to me and said, hey, Cole, we have a problem. I said, what is it? And they said, our food is very expensive. People can't afford our food. But I knew our food was the best food. It had the best story. It was the healthiest, the most nutritional, the most nutritious, and the most interesting. It was engaging for people. People wanted to have it. They wanted to ingest it. They wanted to put it in their bodies. They wanted to feed it to their children. They wanted to put it on their tables, but they couldn't afford it. That's when I realized that food was not the lowest common denominator. It was finance. It was money. Money is the lowest common denominator, and we didn't want to admit it. We're not foraging or growing our food. We're buying it. And that's when I sold the business and moved and took my show into the financial industry.
Amazing story. Love that. We start out with a good question, kind of telling everybody your backstory or the guest backstory. But you're absolutely right. It's food and finance is what keeps people moving and shaking in the world. Appreciate it. I think it's interesting, the story that you brought up here and how you moved from food to finance. So Cole, you've authored a book on the child millionaire concept, highlighting the benefits of well-structured whole life policies for children's financial futures. Do you elaborate on this concept and its potential impact on long-term financial stability?
Absolutely. And thanks for the question, Brian. It's a good one. I spoke about value. I'll continue to. The theme for me has always been value and really, again, diving into, what is your value proposition? So now I find myself smack dab in the middle of the financial industry. I had an exit. I had some money. At the time, my financial advisor, his name was Rich, he came to me and he said, Cole, you have a problem. You have too much money in your checking account. And I said, okay, well, I agree with that. I go, but Rich, where do I put it? And he said to me, Cole, you put it in life insurance. And I laughed so hard. I knew this guy quite well. I thought he was making a joke. I literally keeled over. I said, okay, that's really funny, Rich. Well, he's no, Cole, I'm dead serious. And then he goes, he handed me a book, and it was a book by actually now one of my business partners, who's Dr. Robert Murphy. He's an Austrian economist. He goes, go read this. And essentially what Dr. Murphy suggested in his book was that life insurance, in kind of directly and indirectly, is Austrian economics in action. I was a big believer in Austrian economics. For your listeners, there's 3 different types of economic models. There's a Keynesian model, there's a Chicago school, and there is the Austrian school of economics. Now, the Austrian school suggests in very simple terms capitalism. It suggests that if a business were to be failing, the government shouldn't step in and bail it out because it would be a bad investment because the business is failing. So let it fail. Let the ashes all fall where they may. And let's see what rises out of those ashes. It's likely, a stronger business that doesn't need to be bailed out by, say, quantitatively eased fiat currency. I digress. So I read this book and I said to Rich, holy cow, and this is after a year of doing the work. And because Rich was adamant that my capital was safer in life insurance. And then he said to me, I said to Rich, Rich, life insurance is a bad investment. From what I could tell, life insurance is a bad investment. So why would you tell me to put my money into life insurance? He goes, Cole, I didn't tell you to invest your money into life insurance because I agree life insurance is a bad investment. I told you to put your money into life insurance. In other words, he was suggesting that my capital needed to exist somewhere. And once I did the work, he suggested that I would see mathematically and economically that my money is better held in life insurance companies as a quote unquote bank versus a traditional bank. Again, he suggested to me that your capital needed to exist somewhere. So I did the work and I realized that he was right. But I also realized that to amass my newfound capital from my exit into life insurance companies, I needed to go through a lot of pain. I needed to go through a lot of friction, a lot of blood, a lot of urine, a lot of medical and financial scrutiny and underwriting. It took me years to amass 14 policies in 3 different countries and to be able to move my capital into life insurance. Now, life insurance eventually became my bank. So through this friction, to get to the point of your question, through this friction, I determined that the easiest way to set up a life insurance, quote unquote, as a bank and to use it, quote unquote, as a bank. And I keep saying that because it's not a bank. It's, again, a warehouse of capital, really, at the end of the day, that you can leverage and use very similar to how you would use, say, your checking account. This can be done. It's a vehicle called essentially cash value, dividend paying, whole life insurance, ideally from a mutually owned company. Again, not an investment. And this is also not investment advice, but it is used as a warehouse of your capital. I keep saying it because people really get it twisted. They really want to take my words and think that I said that life insurance is a good investment, and I'm not doing that. But I said to myself, well, how do you start this banking system early? And it was a seminar that I sat in. I was trying to figure out the life insurance industry. I'm not from the life insurance industry, but I recognized pretty quickly that the lessons I learned from my financial advisor, Rich, needed to be shared with the world. There was a lot of value there. And I thought to myself, well, how does the average American get into this without all the friction? And I was sitting on in a seminar and a person explained to me, and I was trying to learn life insurance. I was trying to figure this all out. And this gentleman, his name was Jody. And Jody said in the seminar, you can get life insurance on your child at 15 days old. And I was blown away by that. I didn't understand why you would do that or that was even possible. But again, I started to do the work. I started to research it. And I realized that you could start creating this banking kind of quote unquote system literally at 15 days old. So I wrote a book called Child Millionaire, Be the Change Agent for Your Family's Future. Because I recognize that if a parent, and then Dr. Murphy, who I spoke to previously, wrote a white paper on it, I realized that as a parent, you could put $50 or $100 a month for 20 years, a net total distribution into a child's life insurance policy of, say, $24,000 over 20 years. And that would amass over time through milestone ages of that child, whether if it's going to university, getting married, retiring, or even at death. At the time that we all graduate from this earth, it would leave a windfall of money, millions of dollars, to the next generation tax-free. Now, then what happens here, and this is where the value is, Brian, the value now becomes trading financial literacy, which we've all been told to get rich. We need to understand how markets work, how investing works, how trading works, and then have a whole bunch of discipline to not touch your money and just let it sit there. So between discipline being hard for the average person and financial literacy being almost impossible for the average person, I mean, go try and talk to a finance bro and understand what's coming out of their mouth. All these pretentious acronyms that mean nothing to anyone and just create uncertainty and fear and make people run away. The answer and the value is in financial stewardship. I like cars because my father liked cars. He liked cars because his father liked cars. Unfortunately, I really like cars a lot, and I wish I didn't, but I do because it's in my family. I do it because my father did it. He did it because his father did it. Life insurance and putting $100 a month into your child's future and your generational future will happen because of stewardship. Money will just flow from generation to generation because the previous generation did it and it worked and everyone was born into millions of dollars. So I asked Dr. Murphy to take my book and write a white paper on it and drill it down economically and mathematically. What would it look like in 4 or 5 generations if every American did this and every American family did it? Well, Brian, consumer debt would be wiped out. You would not have this pressure and this stress. And actually, Dr. Murphy, I'm not going to say who, but during the recent election, consulted with a couple very prominent people who are household names today on outside of the box economic ideas and how one might get elected if they were to bring these ideas forward. And what he shared was the idea of the white paper and the book that we could pass a mandate in America that found $100 for every child or $50 for every child on a sliding scale to ensure that they had the ability to put money into this family banking system. Now, it didn't get put forward, but it still might because the Doge is doing some pretty progressive things. And I'll leave it like that. That was long-winded, but I wanted to capture the whole thing.
Thank you. And that's great. I learned a lot here, and that's what I like about the podcast, but our audience is certainly going to learn a lot about economics. And I think it is important that we learn what some of families like the Rockefellers have done for generations with the money and these types of concepts. We should learn from it and get the word out there. So thank you. And Cole, recognizing the potential of blockchain and AI, you established Infineo to digitize whole life insurance. What challenges did you encounter in integrating these technologies into the insurance sector, and how did you address them?
Yeah, really good question. So why blockchain? In my food business, I kind of backed into some blockchain technology. What I was able to do on Ethereum was through QR codes. And this is, again, like 7-8 years ago, a very long time. I basically put a QR code on, there was some cheese products that I was selling. I put a QR code, the data from the QR code tied the essentially movement of the cheese through the supply chain. And then the Canadian government became interested in this and purchased this from me because what it did is it created a recall process naturally held and ledgered on the blockchain. So if someone were to say, eat the piece of cheese and you get listeria, the Canadian government, provided the person scanned the QR code. And let's be honest, QR codes then were not as popular as they are now. But the idea was that if the person were to scan the QR code, then the supply chain and the route that cheese took to get to could be traced back, and the listeria outbreak could be, say, quashed. So this was kind of all, good blockchain use case. And so from that, what I was able to do was look at a use case for blockchain facing real world assets or finance. And also based on my work with life insurance, I was able to realize that life insurance is potentially the best possible use case for real world asset tokenization because of all the friction. And mostly, Brian, because of the fact that life insurance is so misunderstood. I can't think of a more valuable thing that has a worse reputation. I walk into a room, I talk about blockchain. People are fascinated by me. They have questions for me about Bitcoin. They have questions for me about Ethereum. They have questions for me about, I live in Bahamas and I went through FTX. They have questions for me about that. I walk into a room and I talk about life insurance. I clear the room. No one wants to talk to me. They run away. Don't try and sell me. My cousin, my brother, my aunt, and my mom and dad all tried to sell me life insurance at some point in their life. Stay away from me. Unfortunately, it's just got a terrible reputation. I recognize that I could make life insurance sexy through technology. You could abstract out all of the mistruths. The reason it's not sexy and the reason it's misunderstood because it's a highly, highly profitable industry that is honestly just ripe with corruption and misinformation. It's a highly complicated asset class that is very misrepresented because of the amount of commissions that it's paid. There are massive, massive commissions. It's to get a license in the life insurance industry, you need about $350, no high school education, multiple choice. You can fail it 3 times in a month. Once you pass, you're sent out into the world to sell the most highly commissioned, most complicated, misunderstood financial product in the world. You think we're going to have problems with that? You think it's going to attract the wrong type of person or a person that's unqualified? You think we're going to attract, because of the amount of profit tied to the industry, a bunch of multi-level marketing companies that continue to bastardize the reputation and the value of it? Absolutely. And that's exactly what's happened. The beautiful thing about blockchain technology is that with blockchain, you represent the truth and the truth only. Once data is ledgered, you cannot go back and manipulate or change that data. So the idea is that you don't need to trust the truth. And that is what technology brings this asset class. It reframes it. It not only reframes it in terms of credibility, but what it also does is it allows people to access it in a much more efficient way. If you could imagine that life insurance has a $4 trillion total addressable market, and it's the only asset class essentially without a secondary market. So people might think, well, there's got to be regulatory risk tied to that, or regulatory reasons why. There's not. In 1911, life insurance was deemed property. You can trade it as such. There's nothing standing in the way except for massive amounts of friction and pushback by the industry for creating a secondary market. Enter blockchain technology. Blockchain technology allows, and AI allows, these assets to be moved through in a regulated way, the primary, secondary, and into the tertiary market for people to be enjoyed. Basically, what it looks like in the tertiary market is a fixed income alternative with no correlation and a 3 Sharpe ratio. So for those that look that stuff up, it's super powerful. I won't get into what it all means, but it's basically blockchain and technology today has arrived to the point where we're allowed to create a new asset class for leverage. Even the LTV on this stuff is 100% sometimes, which is unbelievable. So you asked me the question, well, what were some of the challenges? The challenges are the life insurance industry. They don't want this to happen. We've had 3 years of pushback from the life insurance industry because they have been the gatekeepers of the analog. The only technological innovation in the life insurance industry in the last almost 200 years has been DocuSign, if you can imagine. And the thing about DocuSign is it was force-fed by the consumer to the life insurance industry during COVID because everyone thought they were going to die. Everyone was trying to buy life insurance and FedEx and UPS weren't working. So the life insurance industry couldn't send out packages for wet ink signatures. They had to acquiesce to DocuSign. Now they run around bragging about all the technological advancements that they've made in the last 5 or so years, which is really DocuSign. And that was just an exercise of greed so they could bring in more premium dollars based on the hysteria and the fear that people thought they were going to die from COVID and them trying to buy life insurance and just products. So I hope that answered your question. The friction is huge. It's absolutely massive. It's a huge mountain to climb, but we're doing it because we believe it is the best use case for blockchain technology.
Thank you. And I do appreciate you highlighting some of the stuff that's really important. You know, at the end of the day, we want to know that our money is safe and we're working with somebody trustworthy. And what I found in blockchain and Web3, which this platform is built on, by the way, we embrace it. We love it. We support DeFi. We think that we need to give power back to the people. We need the truth out there. And I love what you're doing. And this really excites me. It really does. I want to really highlight this podcast when it goes live. So just want to let you know that. Cole, with the advent of digital assets and evolving financial landscapes, how do you envision the role of whole life insurance changing in the coming years?
Making it accessible to everyone. I love you. You asked me that question. I literally got goosebumps just knowing that this can happen. We spent 2 or 3 years really trying to understand that this can actually happen. And how do we, as a startup in a very bootstrapped way, understanding how wealthy and how archaic the life insurance industry is. I mean, how do you get this new asset class out there? How do you democratize whole life insurance specifically? I mean, if you think about whole life insurance just at it very pragmatically, what is it? Well, it's an algorithm at the end of the day. It's a mathematical formulation that allows for leverage, essentially. It's a trade. It's a representation of a trade. Well, what are you trading? What are you leveraging? If you think about what it is, it's an input of premium dollars into the life expectancy of a human being, run through the bells and whistles of a whole life insurance policy, risk, reserve capital, paid up additions, dividends, and it puts an output out. Well, the output is huge. And the output with, say, a $50 input through the algorithm that I just described, the math and the life expectancy of a human being, is the output can be, hundreds of thousands of dollars with an input of $50. So that's a big arbitrage, right? And when you start to really think about what it is that we're doing right here, whole life insurance is no more than a way to liquidate, leverage, and valuate the most important asset in the world, which is a human life. That's really it. I mean, again, back to the first question that you asked me, or the second question you asked me, I mean, that's why I wrote the book, Child Millionaire. Well, when do you start valuating a human life? Well, you should be 15 days old. Legally, you can get life insurance on a child. That's why I felt a responsibility outside of all this blockchain technology was to inform people that you could create generational wealth by pouring capital into the most important asset in your life, which is your children. You can't argue that. You can't argue that a human life is more important than any art collection, 401k, Roth IRA. In Canada, if you get Canadian listeners, an RSP, a retirement savings plan, you can't argue that a human life is less important than any of those things. But then the question becomes, well, if it's such an important asset, how do you leverage it, liquidate it, or evaluate it? And the answer is whole life insurance. But you got to abstract out all of the pollution, the emotional pollution that comes with the word life insurance and insurance. You have to abstract that out. We have to look at it in pure economic forms. It's input, premium dollars, output, a living benefit, and a death benefit. And that's the unique thing about life insurance, and specifically with blockchain technology, is it gives you access to that asset class with little to no friction. The key thing, Brian, is the governance of blockchain. Governance of blockchain is a peer-driven governance model. It's peer to peer. The last thing I thought, when I think about a peer, I think about a human being. I think about a human being standing next to me. That's my peer. A human being is a human life. Well, how do you leverage, liquidate, or evaluate that human life? Well, I just described it. It's the algorithm of life insurance. Premium in, living benefit, and death benefit out. It's a big arbitrage. So if we have a peer-to-peer governance model, what we're able to do is decentralize the entire thinking, decentralize the risk, decentralize all of the people with their hand in this very lucrative cookie jar, democratize the value of the living benefit. And I'll highlight the living benefit. These policies pay back a massive dividend to the policy owners because the risk on these assets is so low, and the predictability of the life expectancy of the asset and the scarcity of the asset and the non-fungibility of the asset, which is a human life, is very, very, very high. It's very predictable. We know essentially through all kinds of data when that asset is going to graduate from this earth and expire. So I digress, but the answer is that whole life insurance and a peer-to-peer governance model has an unbelievable opportunity for human beings moving forward to succeed and to be able to put high quality food on their table because they're going to be able to afford it. They're going to be able to nourish their families. And think about how I must feel, Brian, because I've been working at this for so long now that we have this new government. We have RFK pushing healthy food. We have the Doge. Like the Doge is like, I feel like I'm in a simulation right now with what's happening with the US government. And can you think now that I actually have an opportunity to go forward and democratize and disrupt and push this new asset class forward with the support finally of the American government and the American people? It's pretty darn exciting. But it's people like you that actually interview people like me and push this out and keep the education going. So thank you.
Absolutely. I got goosebumps because this is what I think the American people and people around the world want is they want freedom. They're tired of being told that we have to do it one way. And there's so much corruption, and we need to bring blockchain technology in every part of the government, I believe, and just be transparent. I don't care what you want to do, what your beliefs are, but let's keep the technology in there to help have those bumpers or those guidelines to keep our human nature to, go down that corruption path. So I appreciate you highlighting all this. This has been a very fulfilling podcast for me, and I know it will for my guests. And Cole, it was such a pleasure having you on today, and I look forward to speaking with you real soon.
Thanks, Brian. It was a pleasure. Great questions. Keep up the good work.
Bye for now.